Welcome everyone to Vested Interest. This is Shane back for a Stock Pick of the Day video. It is Tuesday, March 18th. We're going to take a look at Royal Caribbean Cruises. This is out of the consumer discretionary sector. Before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that subscribe button down below. Hit the notification bell so you're notified whenever I put out any new content. I do this Stock Pick of the Day video series Monday through Thursday when the market's open. We take a look at a company stock that's pulled back on the day, run it through my screener, and see if it makes it onto my watch list. There's the thanks button down below for anyone who might want to help the channel that way. You can buy me a cup of tea. And share the videos with anyone you think that might find value. If you know any other dividend growth investors or investors out there in general, go ahead and share the videos. And watch the videos to the end. Watch time is one of the metrics that the YouTube algorithm looks at to spread the videos a little further. And thank you to all the viewers and subscribers of the channel. I really do appreciate it. The channel continues to grow because of people like you. This is the Vested Interest Stock Screener. This is the criteria we will be running through the video here. We're going to take a look at the first 8. We won't look at price to book. This is not a company out of the financial sector. I do add that in when we're looking at companies out of the financial sector like banks or insurance companies. Then we look at price to book, 1 being fair value. You can use price to book for any company, just don't blindly use 1 as fair value. Compare them to their historical price to book as well as other companies in the same business, in the same sector. All right, back to Royal Caribbean. Check them out on their homepage, www.royalcaribbean.com. That's www.royalcaribbean.com. That's www.royalcaribbean.com. That is their homepage where I pulled this information from. Royal Caribbean International has been delivering innovation at sea since its launch in 1969. Each successive class of ships is a record-breaking architectural marvel that revolutionizes vacations with the latest technology. Today, the cruise line continues to dial up the guest experience for adventurous travelers, offering bold onboard thrills, spectacular dining options, breathtaking entertainment, and world-class accommodations, all while sailing exciting itineraries to 270 plus destinations in 60 plus countries on 6 continents. Royal Caribbean has been voted best cruise line overall, and that's what they are. They are a cruise line, right? So if you're going on vacation, that is what they offer. And I think even some people that are retiring are now living on them for months and years at a time. Sounds like it's cheaper than buying and renting property, but for 22 consecutive years by Travel Weekly readers, and Perfect Day at Coco Cay, its private island in the Bahamas, has been recognized as the private island destination by Travel Weekly readers for 5 years running. So again, if you're looking to go on a cruise, the Royal Caribbean might be one that you jump on. All right, we are talking about Royal Caribbean Cruises, ticker RCL. This is out of the consumer discretionary sector. Closed out the day at $203.38. The reason we're taking a look at them, down 7.31%. Big drop on the day overall. 52-week range as low as $125.06, as high as $277.08. They are floating between their 52-week high and their 52-week low. Market cap of $54.735 billion. Beta of 2.54, so they are much more volatile than the overall market, more than twice as volatile as the overall market. PE, price to earnings ratio, $18.57. EPS earnings per share, they're sitting at $10.95 per share. Their earnings date coming up at the end of April, sometime between the 23rd and the 28th. Forward dividend is $3. I believe this is a quarterly payer. We'll see that here towards the end of the video. Starting dividend yield currently at 1.37%. Their ex-dividend date was March 7th. You needed to be buying them on March 6th or before to be able to get their next dividend paid out on April 4th. 1-year target estimate, at least according to Yahoo Finance, where I pulled this information from, $281.34. So Yahoo Finance sees some upside from where they currently sit, and that would also be a new 52-week high. Jumping over to the right, I like to look at dividend yield theory to see if the company is potentially undervalued. To do that, we look at their 5-year dividend yield average at 2.52%, compare it to the current 1.37, or over here, forward annual dividend 1.37, same number. Since their current dividend yield is lower than their 5-year average, that actually speaks to overvaluation according to dividend yield theory. Now, payout ratio, there's going to be a little bit of a discrepancy here. Yahoo Finance has it at 8.68%. StockAnalysis.com has it a little bit higher, but both of them are well under the 75% I'm looking for. So this would be one of those times I would look for a third source to verify which one is correct. We'll see StockAnalysis.com's payout ratio here in a little bit towards the end of the video. Dropping down below, I want growing free cash flow over time, because typically if a company has growing free cash flow, there's some things they can do with that cash. They can pay down debt, they can make acquisitions, reinvest back into the company, buy back shares, pay a dividend, which they do, and raise that dividend over time, which I want growing dividends and growing free cash flow so that the company's dividend is safe and they can continue to grow that as well. And now looking here at their free cash flow going back to December 2021, you can see negative 4.1 billion, 2022 negative 2.2 billion, 2023 580 million, and 2024 1.9 billion. So you can see nice steady free cash flow growth. Doesn't look like they were repurchasing shares, but they are repaying debt. Now you want to compare the repayment of debt to the issuance of debt to make sure they're paying down more debt than they're taking on. But it looks like they are consistently repaying debt, and as their free cash flow has grown, so has their repurchase or the repayment of their debt as well. Jumping over to StockAnalysis.com, this is another source I go to for information. I am not affiliated with StockAnalysis.com or Yahoo Finance, just two sources I go to, and I do recommend more than one source so you can make sure the information you are getting is accurate and up to date. Now, 17 analysts from StockAnalysis.com, they call it a strong buy. Low estimate of $225. It currently sits lower than their lowest estimate, so if it came back up, that would represent a 10.74% increase. Average estimate of $287.06. That's pretty close to what we saw with Yahoo Finance on the previous page. That would represent a 41.28% increase. And if it happened to hit their high of $330, that would represent a 62.42% increase. All the while, you could collect that 1.3% dividend yield. Statistics, I like to look at statistics, look at return on equity and return on invested capital. I like 10% or better for both of these metrics. It tells me how well the company is reinvesting back into itself. Return on equity is smoking high, 45.83%, but return on invested capital is a little lower than I'd like it at 9.26%. I want 10% or better. Now, if this was the only thing that was keeping me from buying the company, I mean, that's close enough to 10%, I would go for it. But if it's, one of many things, then maybe I don't do more of a deep dive. EPS growth is forecasted at 19.73%. I like 5% or better forecasted over the next 5 years, so that beats the metric there. And revenue growth forecasted at 8.93%. Like that as well. Good numbers overall, really, on this one. Again, quarterly payout ratio 15.54%. This is where I said there'd be a bit of a discrepancy. Yahoo Finance had them in the 8% range. StockAnalysis.com has them in the 15% range. So I would look for a third source to verify which one. No dividend growth here. They're saying 1 year growth, but I'm not saying any. Buyback yield, they're saying is positive at 1.41%. I did not see where they have been buying back shares, at least not in the last 4 years. Shareholder yield is positive at 2.24%. They do pay out on the January, April, July, October timeframe, which is off schedule for most companies. Going back here to June 2018, you can see 60 cents in dividends paid out. They raised that up September 2018 to 70 cents. Raised that up September 2019 to 78 cents. Looks like they dropped that down in September to 40 cents of 2024 to 40 cents. December 27th back up to 55 cents, and then most recently March 2025 up to 75 cents. So maybe they've been raising it since 2024 after the drop in 2020, but I'm not giving them any years of growth. I'm going to say they've been flat, no dividend growth right now. All right, let's run them through the screener. This one's going to be a quick video. That's okay. Understand the business. They're a cruise line, right? If you're going on vacation and taking a cruise, their Caribbean Cruise Lines is one that you might jump on. Growing free cash flow, yes, check there. Growing dividend, no. Dividend payout ratio, 75% or less, yes, check there. Check valuation based on dividend yield theory. Dividend yield theory says they're actually potentially overvalued. It is not even close to within 15% of a 52-week low. Return on equity was good, but return on invested capital is just a bit low at 9.2%. Again, if you wanted to say that's close enough, you could give them a check there. I'm not going to argue with you. Earnings per share growth, check there. Now, they only list 4. If you wanted to give them the return on invested capital, because it's at 9.2% versus 10%, you could get to 5. That would make it onto my watch list if you added that one in. Again, not going to argue with you one way or the other. For me, it's 4, not quite there yet. I would look for more of a pullback personally, and I'd like them to get their return on invested capital up over 10%. Let me know. Let me know in the comment section down below what you think of the company. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of Caribbean Cruises. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like this you'd like me to cover in the Stock Pick of the Day series, drop it in the comment section. I'll work it into the rotation on a day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investment journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you are not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor. And if you've made it this far, go ahead and hit that like button down below. Share with anyone you think that might find value. Drop a comment down below. Let me know what you think. And don't forget to subscribe to the channel.